welcome to today's live technical analysis, starting off with the euro against the US dollar. As you can see, it has broken below our upwards moving trend line, and with the narrowing of the Bollinger Bands combined with the RSI figure remaining near 50, we would be maintaining a neutral outlook for the pair, essentially moving in a sideways fashion between S1 and R1. We had already placed our support and resistance levels, just need to slightly edit the text labels. 1.0635 for R1, R2 1.07700, R3 1.09350. Support level at S1 is at the 1.0460 level, although that could actually be brought slightly higher. But given that they're all equidistant as well, there's no need for that at this point in time. We could be maintaining S1 at 1.0460, with S2 at 1.0315, and then lastly with S3 1.160. Fixing this text label here. So we could even say that this might be moving in a sideways fashion. For it to be moving in a sideways fashion, it would need to come down to S1 and validate the support level at S1 once again. As you can see, it was moving in an upwards fashion, broke below our upwards moving trend line, RSI near 50. It's also at the mid range of the Bollinger Bands, perhaps a market correction before coming back down to S1 to verify that this is indeed a support level. For the sake of argument, we could change slightly the colors of this sideways moving channel. As you can see, it is now in orange. It needs to come back down to S1, fail to break below, and then move in an upwards fashion. So today we're going to be looking at a few things. One is going to be Goldman Sachs and perhaps Lockheed Martin, who are due to announce their earnings today. We're going to be looking at commodities given the conflict in the Middle East at this point in time. It's a current topic, so there's likely to be high market volatility in gold and oil as well, so that would be worth looking at. We're going to be looking perhaps at the pound against the US dollar. So the earnings report came in for the UK. Average weekly earnings came out 8.1% compared to the expected value rate of 8.3 and the previous rate of 8.5. The decline could be an indication that we may be seeing some of the interest rates that were placed by the BOE perhaps making their way into the UK economy. The lower than expected average weekly earnings rate could weaken the case for the Bank of England to hike in their next meeting. We can see this highlighted text box, this yellow box in which it's appearing to be moving in a sideways fashion. It's not moving in a downwards fashion. It's broken above our downwards moving trend line. It's near the RSI figure of 50. We're on the 4-hour time frame as well, similar to that of the euro. What is interesting, in my opinion, for the majority of these pairs, so let's just zoom in, as you can see, fairly narrow as well, but it's all a matter of perspective. Simply put, came back down, tested, probably going to come perhaps, could possibly come back down to S1, moving in a sideways fashion. These pairs that are denominated by the US dollar are likely to be impacted by funds released from the US, in addition to regional conflicts. So why could the US dollar be impacted by the current conflict in Israel? Well, the dollar is considered the world's reserve currency, so could be receiving some safe haven inflows as well as gold. For the dollar against the Japanese yen, this is an interesting story. We said the last time we had looked at this chart together, which was when this move had happened, we had estimated that this move was as a result of the government intervening in the FX market, pushed it lower, and then did not actually verify that this was a government intervention in order to see how the market would react. It's gradually moving towards our prior level of 149.90 at R1. It's close, which could mean that this may warrant an intervention. Why? They're closely monitoring the FX markets. We personally think that this was a government intervention as well. So it is possible that If this was indeed a government intervention as we're expecting, should it reach these levels again, we may see it moving in a downward fashion again. Although, should they actually intervene this time officially from an official level, I would expect them to announce it as well rather than that just let the market speculate as to the reason of this strong downwards move. So I'd be keeping an eye out on the dollar against the Japanese yen as it moves towards R1 and perhaps even above R1. So despite the technical aspect of charting indicating that this may move in upwards fashion, so perhaps a bullish outlook for the pair. From a fundamental point of view, I would be bearish. Well, simply put, I think the government may intervene between R1 and R2 and could lead to a similar motion as we saw here. From a fundamental point of view, they're noting the current fluctuations in the market. On another note, for the Japanese yen, it's also an asset. Well, it's also considered to be receiving perhaps some safe haven inflows, although outweighed by the US dollar. For the Aussie, we note the RBA's meeting minutes that came in earlier on today. Essentially, the minutes indicated that the bank had considered another rate hike. So we're just actually just going to clear out our chart. Let's just do this together again. Let's just remove our support and resistance levels. Feel free to open up your own MT4 and chart along. There we go. Okay. For our time frame, I provides a more clear view of the market. The Aussie, similar to the British pound, we can see that the dollar was gaining against the pound, some strength perhaps, or a market correction in a sideways fashion. Slightly gaining, perhaps a slight weakening of the US dollar. But let's look simply at the Aussie. Support level at S1. This trend line. Upwards moving fashion, failed to break, came back down, failed to break below, and is now moving in an upwards fashion. So this would be my S1. $0.6285. So this would be S1. Which was actually S2 as well. So breaking below could have been a bearish, could have provided a bearish outlook, but it broke above our downwards moving trend line. It's actually above the mid-range of the Bollinger Bands and our Signer 50, so I'd be maintaining a neutral outlook as well. For S2, we're going to have to look back at the historical data. Let's measure the distance between S1 and S2. $84 pips. Not too bad. We took a swing, well, we took a low. Actually, so that's highest, lowest point, and then we're gonna have to take the wicks, perhaps to provide some discretion between S2 and S1. We may need to reevaluate our support and resistance levels. Well, predominantly our support level, because they're far too close to each other. 42 pips could easily be broken. For example, let's see. This in itself was about 60 pips, so it could have broken below. So now I'm looking for a support level that might be higher than this. Personally, I would have placed, as I did before, S1, S2, sorry, or S2 around this point. But given that we have S3, we have to reevaluate our support level at S2. I'm going to be using the wicks. I don't usually like to use the wicks as I believe that the candles bear more of significance, so the actual bodies rather than where it reached for. So for S2, it's a tricky one. I'm going to be taking this swing low. It's closer to S1, but I'd rather have it closer to S1 than S3. I would be expecting major support between S2 and S3. 0.6240. For S1, 0.6285, and then for S3, 0.6170. For resistance levels, I take at the beginning of the downwards moving trend line an intermediate resistance level could be at this old high, but for a more substantial one, I personally believe that it is at R1, 0.6420. VRBA's meeting minutes may have provided some support for the Aussie, although should the dollar overcome with any financial releases, it may cede back control and move lower. We'll be coinciding our R2 with our sideways moving channel that we had placed at an older time, as you can see. Validating this high. We're ignoring this high here. Would be 70 and 85 pips. .6508, actually 0.6510. And then we're going to be moving on to our commodities. Commodities are more interesting for me during this week. Clearly, due to the conflict in the Middle East, there's appears to be high market volatility. There are numerous talks and discussions happening behind the scenes. U.S. President Joe Biden is expected to visit Israel tomorrow. So any announcements there as well? Should a peace deal or a peace initiative be announced? We may see gold weakening and perhaps oil fears subsiding. Russian President Vladimir Putin is speaking with Chinese Premier Xi Jinping today. They've actually met. So that is an interesting development as well, which could affect oil. So maintaining a sideways outlook for the Australian dollar against the US dollar for now, and we're going to be looking at probably what you all want to see. We're going to be looking at oil in just a minute, but we're going to be looking at gold. So we have our one. We're going to be fixing this anyways. So this is not looks at the text table. All right. Here we go. Ignore the text labels for now. Let's just purely look at the chart. Okay. We're on the 4 hour. Let's zoom in. You have resistance at this high, 1,932. So this would be our resistance level at R1. Should the current conflict escalate into a more regional conflict with more actors entering the conflict in Israel, then I would not be surprised if gold jumps jumps perhaps to 2000, breaks above R1, move towards R2, which we'll be placing in just a moment. You have S1 at the 1900 big figure. Note that gold last week had its biggest descent within a week for the past 7 months, capitalizing on the fears. Gold is a safe haven, could be a safe haven during times of instability. So if there's a conflict or a war, then it makes sense that gold would be gaining. It appears to have capitalized on those fears and has moved higher against the dollar. RSI is at 70, implying a strong bullish market sentiment, still above the mid range of the Bollinger Bands. Despite it failing to break above R1, I still would maintain a bullish outlook for the commodity. Why? Well, the current conflict does not appear to be ending anytime soon, despite the best attempts made by various parties in order to resolve this conflict. It appears that it may be prolonged for at least perhaps another week or so, perhaps even longer. Nobody knows. The longer it is prolonged, then the more I see gold perhaps gaining. The longer it persists, the more issues we have, gold may gain on those fears. For the US dollar, we may see a weakening of the greenback. And why? Well, the US House of Representatives are without a House Speaker. As you most likely know, House Speaker McCarthy was ousted from his position in the first time in history, and now they're trying to find a new speaker. The House is dominated by Republicans. So, what does that mean? They have a majority. It's a narrow majority, but nonetheless, it is still a majority. It makes sense that the Democrats would not vote for a Republican speaker and instead would vote for their own minority leader, which is, if I'm not mistaken, Hakeem Jeffries. So the Democrats would be voting their own, whilst the Republicans would make sense for them to vote a member from their own party. There seems to be an issue. Following the removal of House Speaker McCarthy, well, now former House Speaker McCarthy, um, House Majority Leader Scalise was nominated to take up the mantle. He won an internal GOP vote and was expected to be their candidate, so to speak. It appears that the hardline Republicans rejected that nomination, so he was failing to garner enough votes to actually become Speaker. And now um, they're nominating a Republican who was endorsed by Trump, former President Trump. The more moderates appear to be against this candidate. So the longer this issue persists and the longer there is no House Speaker, the fundamental issue at hand is that nothing can get passed. You're at an impasse. Without a House Speaker, no bills can be introduced to the floor. If you're not introducing bills, then how can you vote through new bills? Perhaps there are some exceptions to this rule where, should an emergency, they may be able to place a vote to the floor or whatever. But for now, it appears to be still an issue at hand. The longer it goes, and considering that they have to negotiate again on a debt ceiling deal by the 17th of November, the longer they prolong the appointment of a speaker and the more they're debating on who they're going to put to lead the House, essentially, the less time you have to talk or perhaps even negotiate. So that happen, we may see the dollar weakening. But that is pure speculation at this point in time, in terms of them having not enough time to perhaps vote on a new deal. We still have um, just under a month. So, still an interesting development that I would like to see resolved sooner rather than later. But back to gold, the current conflict appears to be supporting the precious metals price. I would still be maintaining a bullish outlook for the commodity. As you can see, we've been placing our support and resistance levels. The longer the conflict continues, the longer we may see gold gaining against the dollar, moving in upwards fashion, perhaps receiving safe haven inflows. It would be interesting. And now we're going to be looking at we're going to be looking at oil. Why is oil also impacted? Perhaps well, it might be impacted because of the regional actors who are oil exporting nations. Essentially, picking sides may cause worries about the supply of oil and natural gas. The United Arab Emirates had made a statement in which, if I'm not mistaken, as it was reported by some news outlets, they had hinted that Europe's natural gas supply could be disrupted. So you're seeing this regional conflict perhaps impacting the commodities markets, in particular gold and oil. So S1 1900, S2 1865, S3 1819, R1 1932, R2 1995, R3 2020. As a matter of fact, we could actually even place an upwards moving trend line. We're using that same point here. So we're still maintaining a bullish outlook for gold. What is interesting though is this gap that exists. At some point, this gap will be filled, in my opinion. So that depends. Will this gap be prolonged or will it happen in the near future? Well, in my opinion, that depends on whether or not this conflict continues for a prolonged period of time. So we're simply highlighting this for future reference. As you can see, there is a gap being formed, and I expect this to be filled at some point. Whether it is now or in the future, that still is to be seen. But for now, we're maintaining a bullish outlook. Once we switch to more macro bearish outlook, this for me would be a target. So I'd be placing a support level around here. But for now, given that it's moving in an upwards fashion, we're keeping our support levels as they are and maintaining a bullish outlook for the commodity. And lastly, we're going to be looking at oil. For those of you interested in equities, we're noting that Goldman Sachs and Lockheed Martin are due to announce their third quarter earnings later on today. Goldman Sachs has been selling off parts of its business, focusing more on wealthier clients. Um, People are discussing, well, analysts are discussing their trading operations. Personally, I would be looking more at their forward guidance and if they've made money off their deal with Apple. If you're unsure as to what I'm referring to, you can simply Google Goldman Sachs and Apple, essentially depositing, well, Apple offering a card with a, if I'm mistaken, a 4% return. That could be generating some profits for Goldman Sachs. So I'd be bullish for Goldman Sachs and for Lockheed, considering you have conflicts. So the conflict in Ukraine, the conflict in Israel, and given that defense contracts may be given out to these companies that are based in the US by the US government, I would expect them to have better than expected earnings, perhaps, and I would be bullish on both stocks. Oil R1 87.0, R2 90.4, R3 93.60, S1 84.3, S2 81.40, S3 78.2. The upwards moving trend line was indeed steep. So, despite it breaking down, we could maintain a neutral outlook as well, given that the RSI is at 50. But given that there is a potential for escalation in tensions in the Middle East, we may see concerns about the supply side of oil driving oil prices higher. On the other hand, there appears to be some discussions happening in the background, perhaps in regards to aid or an easing of tensions, which may be facilitating a temporary lull in market volatility. But I personally think the market volatility may return, perhaps at the end of the week. So for now, it could be a sideways, but personally, I think that oil prices may continue to rise higher, breaking above R1 and R2. If I'm mistaken, and it moves in a sideways fashion between S1 actually 84.5 taking this candle. Let me just highlight that out for you. It's here. Failed to break below, moved higher. So it's my own personal preference, 84.5. And then slightly higher, 81.7. So I have S1, S2, and S3. Could be a sideways. I don't think it's a bearish outlook at this point in time, given that there is still an ongoing conflict. So until that is resolved, I would not switch to a bearish outlook for oil. My two options, in my opinion, are bullish, which is my own personal opinion right now, breaking above R1, moving towards R2, or a neutral outlook due to perhaps some discussions, easing concerns about a wider regional conflict. Perhaps we could see Goldman Sachs as well. Let's remove this. Let's just clear our support and resistance levels. So we have a clear chart. We're on the 4-hour, and we're going to be simply just placing support and resistance lines. S1 304.5. Excuse me, 304.5, coinciding with the lower range, the Bollinger Bands. S2 289.10. And then for S3, could be at the 278, but slightly too close. 275.05. And then for R1, coinciding with this gap, which was actually filled previously, 317.95 for R1. Then we could place R2. 333.55. Note that there is a gap as well. Just zoom in. There we go. And then could place we're going to be taking the high. There we go. 344.40. This would be my R3. Bit close to R2, but should break above R1, perhaps moving towards R2 and then towards R3. So I'd be maintaining a bullish outlook based on the reasons I've said before. I think that Goldman has potentially exceeded market expectations, but we're going to be seeing later on today based on their earnings. And with that does it for today. Thank you for watching.
to another of our videos. Today we'll be looking at a gap. So, what is a gap? A gap is an area on the chart where the price of an asset moves sharply up or down. There is little or no trading in between. As a result, the bar or candlestick chart shows a gap in the normal price pattern. Traders can exploit these gaps for profit. Basically, gaps occur because of underlying fundamental or technical factors. Gaps can appear in the forex market, but they are less common than in other markets because currencies are traded 24 hours a day, 5 days a week. However, gaps can occur when economic data is released that is a surprise to markets. Also, gaps can occur when trading resumes after the weekend or a holiday. Although the forex market is closed over the weekend, the market is still open to central banks and related organizations. So it's possible that the opening price on a Monday morning will be different from the closing price from the previous Friday, which results in a price gap. The difference between the open and closing prices is the gap. If Monday's open price is higher than Friday's closing price, the price gapped up. If Monday's open price is lower than Friday's closing price, the price gapped down. There are 4 types of gaps. The first one is known as a common gap, which represents an area where the price has gapped. The second type is a breakaway gap, which occurs at the end of a price pattern. It signals the beginning of a new trend. The third type is a continuation gap, also known as a runaway gap, and occurs in the middle of a price pattern. This gap type signals a rush of buyers or sellers who share a common belief about the price future direction. And the fourth type is known as an exhaustion gap, which occurs near the end of a price pattern. It signals a last attempt to hit new highs or lows. Thank you for watching.
Today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Adverse Fortune Group, who were finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number two, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay, lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features. So it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience since it has all of the features required all in one app. Okay. I've briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is MetaCode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So we mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, this feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com, because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it will tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects, such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, Gann, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into back testing. Okay, So what exactly is backtesting? So it's basically the use of historical data to test your strategy. Sorry about this, my throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for: net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know you would either have to repeat your testing, or change a variable which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading, a lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your backtesting of your training strategy, then you have a certain number of assumptions that you make off of those results and not based off of whether you think that it's right or wrong. Okay. Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. One practical trait for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay, so first things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis. So purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for retracement, not retracement, sorry, projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm going to get rid of that MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart. So feel free to let me know if you have any requests. If not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for our first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm going to pull out RSI. Okay, RSI isn't really telling us much. So I'm going to pull up stochastic. Okay. So for our stochastic, price, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. It's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel, because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes. So before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.